Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Biora Therapeutics, ticker symbol BIOR. And so I am excited to do this video because I've covered it in the past and it hasn't always been that popular. And I appreciate all of you who reached out to let me know that you do want a follow-up video. Basically I went over this on Sunday during the live stream, posted a clip of it, and you all watched it. So thank you for doing that. And so, yeah, I just wanted to give my follow-up perspective on it now that this, has basically played out as the chart suggested it would. So I'm just going to take you back through, where I came to the conclusion that this breakout would happen. I unfortunately didn't load the boat at this signal here, testing the top of this wedge. Just because it has been bleeding for so long, I didn't expect this to happen. I'm still holding my shares and I'm looking forward to seeing where this goes. I'm just really excited about the company. I hope you guys are too. But yeah, taking a step back here, I am going to just show what I showed in that last video, this channel that we had been trading in. I recently expanded it to include the dashed line, having noticed there were some wicks to the top and bottom that kind of expanded that channel. And the reason why I did that is because looking over here, I had noticed that we kind of broke out of that solid channel and we're trading alongside it. And I was like, well, that's funny. If we broke out of it, I'd expect there to be a violent move to the upside. We didn't see that. And so when I expanded that channel, that is exactly what we got, a violent move to the upside after we not only broke out of that channel that you see here, the expanded channel with the dotted line here, but I also noticed during a stream, so those are really great to check out, Sundays, 9 p.m. Eastern, stream for at least an hour, take ticker requests, have a great time charting. So you should join. So I noticed this falling wedge highlighted by these green trend lines and noticed that we had broken out not only from the channel, but also the wedge. And that Friday of last week, February 23rd, we tested the top of that wedge as well as on Thursday, as well as actually on Wednesday. It signaled this hammer candle that we might be getting a bounce. And we saw that on Monday, we saw a continuation on Tuesday. And, we basically saw some topping signals on today, Wednesday, February 28th, as I record this in the evening. And so I do think that's pretty interesting. I do think that we do need a cool off. So I think it's good that we're seeing a top like this. But, I'm just going to go over the levels that I think we might arrive at and how I do think that we could have another attempt at $2. But ultimately, I don't think we're going to hold it. But before I go over this move, I do want to point out one of the videos that I made on Biora a while ago, I was super excited about it, was when we had this pre-market and after hours squeeze, this range that began in the pre-market down at 110 and then squeezed to the after hours up to a price of $2.32, I believe. It might mess with the scale of the chart a little bit, so I'm going to have to but let's see. Yeah, so this is that price action. So I was super excited about this. But, as you notice, when I didn't have this, including the after hours and pre-market trading, all that we see with it is just this yellow line. There's no price action there because it's disguised around the pre-market and after hours trading. And so that was not a sustainable move up. We returned back to the prices that we were at just before it and went even lower. And so what I see different in the chart now is that we're making these moves during market hours. It does seem like there's a lot of momentum. And so this started to happen. This squeeze started to happen following news that came out on February 26th. If we do flip over to their website, bioratherapeutics.com, we can see that on February 26th, they released news that Biora Therapeutics announced successful completion of single ascending dose, or SAD, cohorts of phase 1 clinical study of BT600. So, they're making progress with their clinical trial. So this is great, great news. And this is only the beginning. This is only phase 1. There's not only going to be successful phases following that, but there's also going to be FDA approvals, and this is going to go much higher. So really, I think this is just the beginning. But I do think that since we have had this Basically 150% move from the low on Friday of last week to the high that was hit today at $1.99. I think that we need to cool off a little bit. And in order to do that, I do think that we will be returning to some of these levels. So it's kind of overwhelming. There are a lot of them, but I just kind of wanted to go over them. Really, we couldn't hit $2. I think that's pretty significant. But, I do think that we eventually will. Also, from this retracement that I did here, from the high that was hit on December 28th, going to the low of 75.6 cents, which was hit on January 22nd, from that retracement, we have the 1618 extension up here at $1.95.11. And so we did come up to that level and we were rejected from it. We were also rejected from $2 a share. We could not make it up to 232, which we had hit in the after hours back here in, let's see, November 30th, I believe. I remember the day. And so, yeah, we did pull back. We did get rejected. And so what I could see, especially that we're closing below these three levels here, one of those being, the psychological level of $1.50, also the 618 retracement from kind of this squeeze move that occurred over the course of this day from pre-market to after hours, that being at a price of $1.56.6. And so we did close below that. We also closed below the high that was hit on December 28th, which was at a price of $1.49.33. And so closing below that, not looking so good. We also did wick down to this yellow line, which is the 786 level from this Fibonacci retracement. That is at a price of $1.3611. And so the low of the day was $1.35. I do think it's good that we did bounce above and close above that. But, really what I see is that we will likely come down to test this downtrend as support. While we don't have too many touch points, it does seem to have served as resistance here when we hit that high on December 28th. So I could definitely see us coming down to that level, and that might coincide with coming back to the 618 of this retracement, which would be right around a price of $1.21 or $1.20. Perhaps could even come down to $1.15, marked by this red line here, which was the lowest close before this move up and this kind of collapse before coming up to the high on December 28th. So I do think that price could be ranging to as low as $1.15, if not lower, potentially coming down to like $1.03.55, which is the 382 level from this retracement. But, also seeing all of these levels coinciding here around 115, including the 50% retracement at $1.13, $1.12, right around there, and also this low that was hit during the pre-market on November 30th, and that is at a price of $1.10. So right around there, ranging from really like $1.04, $1.03, up to $1.13. I do think we could be finding a floor there that could correspond with the top of this downtrending level. So do keep that in mind. But as far as short-term price action goes, I do think that we could get another test of $2. But I do think that would be short-lived. I do think that could be one more pump to that level. And then I do think that we would get a pullback. So, if you do have shares at an average price below $2, it's quite possible if we do get another pump up to that level, it could be a nice way to maybe offload some shares to buy them back lower, because I don't think that the moves that we have seen are going to be sustainable moving forward. But if your average is much higher than $2 a share, I'd say, wait for a pullback. I do think that we will be revisiting at the very least, coming back to the 786 retracement at around a price of like $1.35 here. I think it's $1.33.45. And then also this level, I do remember this as being significant as having been support here when I thought this was a bull flag, which ended up breaking to the downside. That is at $1.3611. So, I do think that with the price at $1.42 currently, I do think that we will be coming lower to $1.36 at the least. And then I think further we will come down to like $1.22, perhaps $1.13, and maybe, above $1. But one thing that I think is really, really good about the current price is that tomorrow is the last day of the month, February 29th. And if we get a monthly close above $1, I think that's going to look really, really good for the stock moving forward. And yeah, I mean, I'm just stoked about the chart. And this move gives me a lot of confidence in it moving forward, but I don't think that long term or in the near term we will be able to hold above $2. So if we do go back up there, that might be a good time to just admire it as it's up there, or maybe trim a little bit, because I do think that we will be coming down to these levels. And I do think that after we've had this violent move up, once we do come back and settle, maybe around 115, this red line does really stand out to me. That could be a great time to really add before we get, a successful end of, let's see, a phase two. I think this could be going up to well over $2 at that point. And then the FDA approvals, I think that this could be going above 5. I think this could be going above 10. So yeah, I think it's going to be a great year for the stock. And yeah, if you enjoyed this content, make sure you let me know in the comments, and make sure you like the video. Always share your thoughts in the comments down below, and check out the live stream Sundays, 9 p.m. Make sure you subscribe for more videos like this. Thank you so much for watching. Take care.